Okay, I think most of the people are on, so welcome everybody, and thanks for taking the time out of your day to catch up with us. My introduction is going to be very short, and then we're going to get into the detail. So for those of you that don't know me, I'm Kevin Watson. I head up SATIB Insurance Brokers, which is part of the First Equity Insurance Group. SATIB focuses primarily on tourism, leisure, and hospitality insurances for businesses and individuals throughout Southern Africa. But the product we're going to be talking about today, which is the tax risk product, is for the South African clients. As you probably read, there's a couple of trends converging at the moment. One is obviously the need for the South African fiscus to fill the coffers, so to speak. Another is the increased ability of SARS to detect discrepancies and then audit individuals and companies. And the third is the ever-changing tax laws, which we could easily and innocently fall foul of. One of the things that is not always evident is that once SARS makes an assessment, it's up to the individual or the company to then object and defend in the correct way. And there's a whole Tax Administration Act that speaks to that. And if you get that wrong, you could lose any claim to even a legitimate claim. As an accountant myself, I've been involved in many tax audits throughout Africa over the years and spent fortunes on attorneys and tax consultants, even when we were in the right. So this product is a great asset to have. We've got the product throughout our South African companies, and for our senior individuals, we've got it in our personal capacity as well. So we can certainly recommend it from a user perspective. So with that being said, I'd like to introduce Willem Lombard, who's the CEO of Tax Risk. He's now going to present to us the details of this product and speak a little bit more about the tax landscape specifically in South Africa. Thanks, Willem.
Thank you, Kevin. Good morning, everybody. Thank you for inviting me to speak to your clients, Kevin and team. It's a privilege to be here this morning. Welcome to everybody. My name is Willem Lombard. I'm the Managing Director of Tax Risk Underwriting Managers. As Kevin mentioned, this is what we do. We try to protect taxpayers against SARS. And during the course of this morning, I'll tell you what it means. I'll be covering what the product means, the market conditions, why we think tax risk insurance is important to our clients. We'll look at some examples. I'll go through what the application form looks like. We'll look at some terms and conditions, really to empower you to make an informed decision if tax risk insurance is what you need. Of course, as Kevin says, there's a lot happening in the tax environment. So it's a very relevant conversation we're going to have with you this morning. All right, just as an introduction, these are the parties involved in this insurance product. SATIB, of course, is your insurance broker. The insurance product is underwritten by Bright Insurance Company. So Bright's the insurance company that stands behind this product from a solvency and from a capital security point of view. We are underwriting managers. For those of you who don't understand what an underwriting manager does in the insurance definition, we're really a specialized field that act on behalf of the insurance company to underwrite and to understand and to manage a specialist risk portfolio better than what necessarily will reside within the insurance company. We then distribute our products through a network of insurance brokers nationally, of which SATIB is one of our favorites, of course. So that's pretty much how this business is set up. Just a brief introduction of some of the people involved in the business. The gentleman there at the top is Mr. Peter de Schmidt. He's our chairman. He's an engineer by qualification, but an insurance veteran. He's been in the insurance industry all his life, or most of his life, serving on the board of many insurance companies. For example, Hollard and Hollard Life. He was with Lombard Insurance. He was the CEO of Infinity Insurance not so long ago. And he's currently a venture capitalist with equity in many insurance businesses, including then as tax risk. The guy at the bottom, that's my ugly mug. Less said, the better. But I'm also an insurance professional. I'm not a tax man. So my background is insurance. but our business is populated with some senior accounting people. The guy there at the top is Mr. Clive Noland. He's the founding chairman of Nolands International and Nolands South Africa. He's a chartered accountant and a career accountant, but he's also done various other things. He was on the board of many other businesses. He brought the master franchise of the Radisson's Hotel to South Africa. He also ran that business for a few years until it was listed on the JSE. The gentleman there at the bottom is Professor Walter Geach. He's a director of our business. Professor Geach is a chartered accountant. He's also an admitted advocate of the High Court. He's written many textbooks. So if you're an accounting professional, you probably studied out of one of his textbooks at some point in time. He's the head of department at the University of Cape Town, heading up the taxation department. He's served on the board of Grindrod, and probably the best trust individual in the country. So very informed, well experienced individual. And these two gentlemen serves on our advisory board. The guy at the top there is Dr. Daniel Erasmus. He's a tax attorney. He's based in the US. He's also an associate professor at the Jefferson School of Law in San Diego. And he does many of the international tax matters in his professional capacity, matters like transfer pricing, base erosion, profit shifting, those sort of international tax efforts. And the gentleman at the bottom is Mr. Scott Pieterse. He's the CEO of Pieterse, Selman and Erasmus Tax Attorneys. He's studying towards his doctorate in taxation and constitutionalities around it. So a very well-informed person running a very successful tax law firm. And the reason why I share these CVs, brief CVs of these gentlemen, is just to give you an indication that when we talk about a specialist skill that we have in a specialized environment, these are basically the skills that we have internally, which we will then bring into the business that we run and that we offer to our clients. And that gives you the peace of mind that when we talk about that, we know what we're talking about. We actually do, right? We have the intellectual capacity in the business from the individuals. Right, then what's tax risk insurance? So many people don't understand that they can insure these things. It's not a well-known product in the insurance market. In fact, we are the only product provider in South Africa that offers this cover. So it's just easier for me to read the definition. So tax risk insurance is effective insurance against SARS tax audits and related disputes. If an individual, a business, or a trust is selected for audit by SARS, or if there's a dispute about an unfair tax assessment in terms of which SARS is demanding additional taxes from you, then tax risk insurance will appoint and pay for a team of tax professionals to deal with the matter, ensuring a fair tax audit and dispute outcome. Right, so typically what will happen is you'll submit your taxes via your very good tax consultant. And then from left field, you get this notification from SARS on that nasty blue letterhead of theirs that says you've been selected for audit, or worse, that you owe them additional taxes, and they'll send you some letters of demand to make sure that you do pay. Now, of course, if you disagree with them, that's then what's called a dispute. Now we need to fight SARS on this dispute, because in many instances, SARS is acting unfairly, or they are just blatantly incorrect from a procedural and from a substantive point of view, right? So in law, you have these two principles. Substantive means is their math is correct or not correct, and procedural means is they followed the due process in terms of the Tax Administration Act and the Constitution in billing you this additional taxes. And it's very important that we provide protection for both those elements, because most often than not, taxpayers aren't aware of their rights, right? They have very good tax accountants, but it's not your business. Tax is not your business. So when you get these disputes from SARS, they're often very complex, they are often stressful and very costly to deal with. And that's the matter that we intend to insure, of course. So that, in short, is what tax risk insurance is. My next slide is a short video clip that graphically explains what we do in a question of 3 minutes, much better than what I can explain.
So you do everything right, pay your taxes on time, and maintain your records. You even have a good accountant to check and double-check your tax returns. This doesn't guarantee that you won't be audited by the South African Revenue Service. You see, no matter how perfect your tax documents are, SARS is looking for ways to increase tax revenues, so they are looking for non-compliance, and they have tons of ways to determine if you are high risk. Let me rephrase that. It doesn't matter if you aren't non-compliant. It only matters that they think that you might be. And trust me, if they are going to look through your records, the taxman is clever enough to find even the smallest error. And if they think they found an error, they will tear apart your files. And then they hit you with a reassessment. Sometimes they don't even tell you why you were reassessed. You just get hit with a notification that you owe them additional taxes. They might even issue a garnishee order and take the money right out of your bank account. So, if SARS issues you with a reassessment, you have two options. You can pay the reassessed amount and penalties to make it go away, whether you're wrong or not. Or you can stand up to them and prove you did nothing wrong. The best chance is for you to have your accountant or tax lawyer go to battle for you, which might take weeks or months, and all that work will cost you an arm and a leg in accounting and legal fees. But there's a better way. If you are ever selected for audit by SARS, or if there is a dispute between you and SARS about an unfair reassessment whereby SARS is demanding additional taxes from you, then Tax Risk Insurance will appoint and pay for a team of highly qualified and experienced tax experts who will fight the case on your behalf without racking up tens of thousands of rands in accounting and legal fees. This team can include leading tax accountants, tax attorneys, and even your own accountant, as may be required to ensure a favorable and fair tax audit and dispute outcome. It's a perfect win-win situation for everyone. So don't wait. Cover your business partners, your trusts, and yourself with our low-cost tax risk insurance, and never worry about a tax audit or dispute again. Do not submit another tax return without tax risk insurance. Speak to your broker to get a quote now. When it comes to your taxes, Tax Risk Insurance gives you the peace of mind when you need it most. Additional information on key product features are available on the Tax Risk website, www.taxrisk.co.za. Tax Risk Underwriting Managers is an authorized financial services provider.
Right, so I think that gives us a fairly good understanding of what the product does. Now, the next part of this presentation, I'm just going to give you some macroeconomic data information, and the reason for that is not to bore you to tears with data, but to remind ourselves of the environment in which we do business and why tax risk insurance is becoming more and more important. Right, so this graph here shows you the economic growth in the country in the last few years. As you can see there, it's quite flat, except for the hiccups in 2020, which was COVID, of course, where the economy contracted by almost 6%, and then some recovery in 2021 and 2022. But if you draw a straight line through that, you'll see that the economy hasn't grown by more than 1%. Now, one would then reasonably expect if the economy is not growing, then likewise, the amount of taxes that SARS is able to extract from the economy is also going to be fairly flat. But that's in fact not the case. So this is the amount of taxes that SARS collected over the last few years over the same period. And as you can see from this percentage growth in the green column, it's quite significant. So SARS was able to extract a lot more additional taxes from a fairly stagnant economy. And there's only really two ways that the taxman can collect more taxes. One is to introduce more tax categories, but really that is a limited application. More recently, of course, SARS attempted to introduce an additional 2% VAT levy, which was not successful. So that's the one way that the government can collect more taxes. And the other way is just to become a lot more effective in extracting taxes from the existing tax base. So SARS is just getting a lot better at collecting taxes from the existing tax base. And they do this through what's called compliance revenue. So compliance revenue means SARS is doing audits on the existing tax base. It's part of their mandates. In South Africa, we have a self-assessment dispensation. So effectively, you tell SARS how much you owe them. And the counterbalance to a self-assessment is the audit, where either randomly or through some other trigger, SARS then selects a portion of the tax base, audits them, and as a result, then is able to collect additional taxes. So that's called compliance revenue. And as you can see, last year, SARS did audits on just over 2 million taxpayers in South Africa, which is up from 1.8 million in the previous year. But more significantly, the amount of taxes they are able to extract through these compliance activities has increased significantly. So 25.5% growth in 23, and again 15.8% in the last tax year, which is a significant increase in the amount of taxes they collect through the audit mechanisms. Now, one would then think is it's only really the tax dodgers, the people who willfully underpay their taxes to SARS, that's getting targeted, that has a problem, but that's in fact not the case. So here, as the previous graph shows, is the compliance revenue is 260 billion rand that SARS managed to collect. And the segment at the bottom right, which I've circled for you in red, is the amount of taxes collected from criminal and illicit activities, right? So those are the people that you'll see in the newspapers. It's newsworthy, but it makes up less than 10% than the overall compliance revenue is from criminal and illicit activities. So criminal and illicit activities are getting a lot more focus from the taxman. It increased from 6.7 billion rand in the previous year to 20.1 billion rand in this last tax year, which is a great increase, and that's what we want to see. We want to see people pay their taxes legitimately, but it makes up a smaller percentage of the overall pie, and that's made up by all the other segments of the honest, straightforward taxpayers like you and me. That's where the bulk of the majority of the compliance revenue comes from. And that, of course, has significant implications for all of us as taxpayers. And the bad news is it's not going to get any better. In fact, we can expect a more aggressive approach from SARS. They did not get their 2% VAT increase, but the government did allocate a significant amount of additional budget to SARS to increase the capacity to collect taxes from you and me. So the top article there, the extract from the article from March, is government funds SARS to improve tax compliance. The South African Revenue Service has been allocated an additional 3.5 billion rand in the current financial year and an additional 4 billion rand over the medium term. So over the medium term, government has given SARS 7.5 billion rand an additional cash injection to just get better at what they do. The bottom article comes from an article about a month ago where it says SARS will have to go all out to justify the massive cash injection. Kieswetter, which is, of course, the SARS commissioner, said since April, he's employed an additional 500 debt collectors. Another 250 will be added to the SARS payroll in June. So that's happened now. So we now know that SARS has employed an additional 750 debt collectors. And he says our estimate is that this should at least give us 20 billion rand. We are targeting a debt collection of the overall composite debt of 120 billion rand. So that's not good news for us as tax practitioners. We can expect a lot more activity from SARS in their efforts to collect more taxes to close this physical gap. So that's the background in what we operate, and that's why we have a business, right? That's why we offer a tax risk insurance product, so that the average taxpayer like you and me can protect ourselves when it comes to taxes. And these are the people who can benefit most from our products. It's companies, and we say companies, we like to aim our product at more to the small to medium-sized enterprises. The large industrial companies often have deep enough pockets and they have access to the resources to fight SARS on their own balance sheet, right? So the small to medium-sized businesses, they're very good at what they do with their business. They got their head in the scrum. They probably have a very good tax accountant to help them out. But when they get sideswiped from SARS with an additional assessment, they often don't have the cash, the time, or the networks to find these skills to put up a decent fight. Then a next target for us is trust. And why trust is because SARS tells us this, right? So every year SARS issues their annual report and their 3-year strategic plan. It's a public document. You can go to their website and download it from the website. So SARS is very good to tell us what they intend to do, and we can adjust ourselves accordingly. So we know that trust is a target for SARS because they say so. Because often they see trust as a way for people to circumvent paying taxes. Then, of course, also business owners and directors, because your taxes are more complicated than your average salaried earner. Business owners and directors' financial affairs are most often closely intertwined with that of their businesses. They're provisional taxpayers. Their taxes are more complex. And also we know that SARS, because SARS again tells us, they will be pursuing high net worth individuals for the same reason. So how does it work? We've already spoken about this. If you, your business, or your trust is selected for audit by SARS, or if there's a dispute about a tax reassessment in terms of which SARS is demanding additional taxes from you, then Tax Risk Insurance will appoint and pay for the team of top tax professionals to deal with the matter. Right, these top tax officials might be accountants, auditors, tax attorneys, tax specialists, or tax advisors. Importantly for you as the potential client is to understand that these skills that we employ to act on your behalf when there's a problem doesn't work for us, right? They're not employed by tax risk underwriting managers, because the level of skills that's required to fight SARS doesn't work for an insurance company. These are all people in private practice. They're in the face of SARS daily. This is their jobs. They are professionals. And the reason for that is SARS is a large organization, right? So the scales aren't equal. SARS has all the resources, you probably don't, or your resources are going to be very, very limited. And so what we try to do is just some social justice in what we do. We ask a bunch of taxpayers to pay some premium into an insurance pot so that when you have an attack from SARS, we're able to balance those scales, right? So to bring those resources in. If there's a fight with a big dog, the way you win a fight with a big dog is you just bring a bigger dog. Right, so that's the intention with tax risk insurance, is that we find the correct level of skill required for your problem. Not all problems are created equal, of course, and then we pay for them. That ensures that the outcome will be fair. And the grayed out part here at the bottom is very important for us. Your own accountant will be a central part of the team, and the fees will be paid for the services during the claim. So you probably have a trusted tax accountant. We're not trying to move him out of the picture. In fact, he's central to what we do. There's this trust relationship between you and your accountant already in most instances. And your tax accountant has the historical background, right? He's already done all the work. It's nothing that we need to re-engineer in order to get to the same place as what we need to do. So your tax accountant becomes central part for the team. And if we need to bring in all these outside expertise because the matter is complex or of a certain nature, then your policy will also provide you with those additional resources. And as I said, that brings you a top-class defense team to deal with any potential issue. All right, so what taxes do we cover? I always say we cover almost all local taxes. When I say almost all, there's specific exclusions that we don't cover, and we'll get to those exclusions shortly. It's very important for me that you understand what we don't cover. And then also local taxes. So we don't cover international taxes. Any type of cross-border activities like transfer pricing or double taxation agreements, those are not covered. We concentrate on the overwhelming majority of local taxes. So, for example, if you have a lodge in Nelspruit and also a lodge in Mozambique, and the Mozambican lodge pays taxes to the local Mozambican authorities, and your Nelspruit lodge pays taxes to the South African Revenue Service, your local leg is covered. So anything that you pay to SARS is covered, but anything relating to the cross-border transactions are not covered. The reason for that is our focus is on the overwhelming majority that makes up the tax base that pay local taxes. And if we are going to include international taxes, it would make those people involved in international businesses will proportionately eat up too much of the tax pot, makes the premium unaffordable for 85% of the tax-paying population. And so that's what we cover: income tax, capital gains tax, VAT, pay as you earn. We will give defense if it goes to court. If there's a dispute resolution hearings, your policy covers all of that within the limits. We'll get to the limits shortly. So the benefits of the product. It removes the uncertainty of an unexpected SARS audit and related dispute. Very important. So all our customers, when they get this attack from SARS, it's almost always a surprise. Right? You pay your taxes. You have a very good tax accountant. So the approach from SARS is not expected, but it happens. It's like car insurance. You're not expecting to have a car accident, but you know there's a risk, and therefore you buy car insurance. And with tax risk insurance, it's nothing different. You're not expecting to have a tax problem, but you know there's a risk. As Kevin said, it's a very, very turbulent tax environment that we're in, and there's pressure on SARS. So there is this risk. And what we do with this product is we remove that uncertainty. At the moment, most of you are self-insuring that. So if you do have a problem, it's coming out of your own pocket. You have to find your own resources, and we offer you the opportunity to say that you can now buy insurance at affordable monthly premiums. And we'll look at what the monthly premiums are shortly. Cover is retrospective, and there are no waiting periods. So that's very important, right? So if you buy your policy today, and you get a letter from SARS next week that says you are being audited for 5 years back, you do have cover. Cover is retrospective, and there are no waiting periods. Doesn't matter how far back SARS goes. Must just mention, if you have an existing problem with SARS coming into the policy, that's not covered. Right? So you can't have the car accident and then take out the insurance policy. I think we all understand that's not how the basic principles of insurance work. So if you have an existing, for example, VAT issue, you buy the policy, we will ask those questions. So if you had an existing VAT problem, we'll ask you to resolve that VAT issue on your own resources, but you'll receive cover for all the other issues like pay-as-you-earn, income tax, capital gains tax, all the other categories. But that problem is ring-fenced until you've sorted it out, and then we'll bring that back into the cover. But your cover is retrospective, and there are no waiting periods otherwise. The next point is your own accountant's fees are covered for the duration of the claim. I've already spoken about that. Your own accountant is very important to us. I'll miss the bullet point. Some of South Africa's best tax specialists are appointed to defend claims. I've spoken about that already. The quality of the resources that we employ and the peace of mind when you need it most. So those are the benefits. So what we don't cover, as I said, there are specific items that we don't cover. I've made a summary of it. And what I've summarized here is just the exclusions which are peculiar to tax insurance. So I haven't put all the exclusions, all the normal exclusions, if there's such a thing, in the summary. For example, if you don't pay your premium, you don't have any cover. That would constitute an example of a normal exclusion. So I haven't put that in here. The rest are in your policy wording and to be considered normal. First of all, I've already spoken about that. Tax evasion is not covered. So if you receive a claim from a client and it's quite apparent that he's willfully underpaid their taxes, they've defrauded SARS, your policy will not operate. No insurance policy covers fraud. Matters which predates the inception of the policy, right? We've already spoken about that. If you have an existing issue, you ring fence it, you deal with it on your own bat. The next two bullet points speaks to that exclusion of international taxes. So income generated outside of South Africa. I must just make reference to the following, except for individuals who are SA tax resident. In South Africa, we have almost a unique situation where you have a lot of professionals applying these skills elsewhere in the world, but you are still a South African tax resident. So you might be an IT contractor on contract to the UK, and you're being paid in US pounds, but you are still liable for taxes in South Africa. You're a South African tax resident, or you're on contract to the UAE, to Dubai, we're getting paid in US dollars, but you're still a South African tax resident. Those are covered. We've recently expanded the cover to bring individuals who are SA tax resident getting income from elsewhere in the world into the cover because there's such a large base of those in South Africa and it's only fair. But if you're a company, so anything about income generated outside of South Africa is not covered. Of course, your policy wording just has a larger explanation of what that means. And the next bullet point, I just broaden that a bit. International tax, customs and excise, exchange control, transfer pricings are all examples of international tax. So local taxes only. Employment tax incentives is another category that we don't cover. Those are typical for people that employ a large amount of people. So employment tax incentives is a fairly new tax category. The intention of it is for companies to give companies an incentive to employ young, previously unemployed people and bring them into the workplace, give them some workplace experience, and then you can get tax credits for that. But the way the act has been written is not great. It's full of loopholes. And as industry would have it, there's been advantages taken of those loopholes. And a lot of these matters are heading to court. Right, so there's uncertainty about some of the provisions of the Employment Tax Incentives Act. And we have to exclude it from cover because, again, it would proportionally eat up too much of the insurance pot for you, in relation to your normal taxes. Then, of course, the normal preparation of your tax returns and the supply of routine supporting information is not covered. You still submit your taxes. We're not your tax accountants. We're your tax risk insurance providers. So you must still submit your normal preparation of your tax returns through your normal mechanisms as you've always done. And that includes the supply of routine supporting information. It's called a verification in tax terms. So if SARS says, please send us the following documents. Thank you for your tax returns, but please send me a copy of your medical aid certificate or your travel log, etc., etc. If you're a company, SARS might ask for some invoices, maybe a trial balance, maybe the payroll. That's information you would have had in front of you in any event in order for you to achieve your tax return. Right, so it's not new information, it's copy, paste, send. That happens quite a lot, actually. The verifications is a very common occurrence, and that's part of your normal tax obligations. We don't cover your normal tax obligations. And then, of course, taxes, interest, and penalties imposed by SARS, legitimate taxes, interest, and penalties. So let's say there's a dispute. We've submitted the claim. We've gone through all the nooks and crannies. The professionals had a look at it from a procedural and a substantive point of view, and we're fine. You did underpay your taxes. That happens sometimes. We will then ask you to pay your taxes. And then also the interest and penalties are not covered. You can't insure somebody else's penalties. But we will negotiate with SARS to see if we can get those waived or reduced or payment terms. And we are often quite successful if it's a first-time offense, and if it's an obvious error, we are often successful in getting better terms on those interest and penalties. So those are the most important exclusions. The next is a short case study that I'm going to share with you. It's a typical middle-of-the-road type matter that we always deal with. We have some larger, we have some smaller ones, but this is a typical one. It's a smallish company, and they received this assessment from SARS that says you owe us 604,000 Rand. For this company, it's fundamental. It'll put them into liquidation. It's a small business. They've used their tax accountant to start a dispute process with SARS because they did not understand where this came from. We know the accountants very well. They're very good accountants, but there was no joy. SARS says, pay this, and then you argue later. It's a basic principle, right? And for this client to pay this amount of taxes would be insolvency. So clearly a very stressful time for the client. She submitted then a claim to us. We appointed these tax attorneys, and really two things went wrong here, which favored our client. We never argued the quantum. We never argued the 604,000 Rand and how SARS got to it. We argued the procedural matters in this case, and two things went wrong. So SARS did the verification. I asked for supporting documentations. There were quite a lot of documentations, and the client, through accountant, agreed with SARS to not upload it via e-filing. It was too big to upload via e-filing, but to email it to the client in batches, or to the SARS agent in batches, which she then did during the course of the afternoon, and the next morning she received this assessment. Now, there's no way that SARS was able to pay attention and absorb all the information that was put in front of them before issuing that assessment. So that's fundamentally unfair, right? So if SARS calls for information, you provide the information, they ignore the information and still issues the assessment. It's fundamentally unfair, and that cannot be so in a constitutional democracy where they just bluntly ignore all the information provided. So that's the first instance. The second instance is that in terms of the Tax Administration Act, if you're being audited, SARS must keep you up to date. And then when they finish the audit, they must issue what's called the Section 42 Letter of Findings. The purpose of that letter of findings is for SARS to say, listen, we've audited you, these are the processes, this is what we looked at, this is what we found, and we think you owe us the money, and they must give you 21 working days to respond to that item. In this case, there was no letter of findings. SARS did the verification, issued the assessment. and effectively putting the ball in the taxpayer's court to prove they did nothing wrong. Again, in a constitutional democracy, there's no way that you can owe the state money and you don't know why. So the client's rights were violated. SARS took advantage of the apparent lack of knowledge by not issuing the letter of findings, which then, because the procedures were violated, the client's tax rights were violated, it makes that assessment automatically invalid. Right? There's case law around that. That if you break procedure, any assessment is deemed automatically invalid, and our tax attorney labeled those points and reminded SARS of our clients' rights and what their position is. There were a little bit more, of course, legals up and down. It's not the one letter. It's never that simple. But at the end of it, we then received this outcome from SARS, again on the nice blue letterheads, that says the South African Revenue Service has considered your notice of objection. Your objection against the 2018 tax period has been allowed. So a simple one paragraph letter, no huge fireworks or explanations about where they possibly. It's straightforward. We agree with what your stance is in the dispute, and your objection has been allowed. So clearly a very good outcome for our client. She was very relieved. In fact, what happened afterwards is she then received a refund of close to the 600,000 rand. I think it was 599,000 rand and some cents, which was the refund she was expecting in the first instance. She then received. So, as I said, a typical case for us. We do get the larger cases. This is an example of a larger case where SARS is demanding 12.7 million rand from our client. Clearly a larger business, more complex issues, but just to give you an idea of that, they can get quite large if you let it. Right, so that's the example. The final part of this presentation is we're going to have a little look at the application form, the rates, what you can expect to pay, and what your indemnity limits are. So this is what an application form looks like. It's a one-pager, so really not complex. The top part of the application form is your details, who you are, your tax reference numbers, etc., etc. The middle part is your bank account details for us to raise the bank debit orders. And the bottom part is 7 or 8 disclosure questions. So as an insurance business, we need to understand the nature of the risks that we're taking on. And that's what those questions do. We ask you a few questions about your history in tax, where you are, if you're expecting any issue to happen. It's the nature of insurance to understand the risk. So we expect you to complete that honestly, of course. It's a obligation of disclosure. And that's it, right? One application form. It's the same application form. Doesn't matter if you're a company, an individual, or a trust. You indicate on the application form, we'll have a look at it shortly, of what the nature of it is. Importantly, each taxpayer fills out their own application form. So if you're a company, and it might be a group of companies, maybe there's two, a holding company and an operating company, there's 2 or 3 directors sitting around those companies. So effectively, there might be 5 separate tax-paying entities in that group. Each taxpayer in that group fills out their own application form, because we only cover the one taxpayer in the application form. That gives you the opportunity then to choose who needs cover and who doesn't. So if you think the holding company doesn't need the cover, but you'd like the operating company to have the cover, then you can make those decisions. If you think only 2 out of the 3 shareholders need cover, you can again make that decision who needs the cover. But importantly, each taxpayer fills out their own application form. The second page of our application form is the rates and indemnity limits, which shows what your premium is. We'll zoom in on that shortly. And the front page, effectively, of the application form is the summary of the cover. Really, all the information that we've discussed this morning, and a little bit more, we've summarized it for you. So when you buy the policy, you have the rates, you have the cover limits, you have what's covered, what's not covered, and the application form in front of you. And it's a simple one-page application form to fill in. So I encourage you just to take the 10 minutes. That's about the amount of time it will take you to fill out the application form, to do that if you need the cover, because you need to buy the cover before you have the issue with SARS. Right, so I recommend don't procrastinate, just do it and get it done, because it won't take you a lot of time. You won't be sorry when you get that left field letter from the taxman. So let's zoom in on the application form. As I said, same application form, doesn't matter if you're an individual or a business. The top right hand corner, you tick which category you are applying for, if you're applying for yourself as an individual or your company. We also have two types of trust, a trading trust and holding trust, and we'll get to what that means shortly. So let's zoom in on what the rates look like. So as I said, your last page on your application form summarizes the rates. There's four boxes there, as you can see in the green. The top one is for companies, the middle top is for individuals, the bottom top is for trading trust, and the bottom one is for passive holding trust. So let's zoom in on the companies and individuals a bit. So for companies, your premium is determined on your annual turnover in the last financial year, right? So let's say, for example, your turnover is 75 million rand in a year. You then fall into that band of between 50 and 100 million rand, and your premium is 1,540 rand a month. If you're a small operator and your annual turnover for your company is less than 3 million rand, then your premium is 265 rand a month. So as you can see, it's very affordable. On the right-hand side is the indemnity limit. The indemnity limit is the maximum amount that we will pay. And it requires some explanation. So as you see at the top, it's the annual aggregate indemnity limit limited to 100 hours for any one claim. Now, the number of hours is the number of hours the tax professional will spend on your case. So I'll be that an accountant or attorney or a combination of the both. It's the number of the hours because they're all charged by the hour, right? So that's how we get invoiced. Now, let's take your example again. We're in that bottom category. So your cover per annum, annual aggregate, is R1 million or 300 hours, whichever is the lesser. So we have this double indemnity limit cap. One is a rand amount, and the one is a number of hours in a year. And the reason why we have this double indemnity limit cap is not all service providers charges the same rate per hour. So if you're a Sant and tax attorney, for example, you're going to charge a much higher rate than if you're a tax practitioner from Pofadder. They differ widely. Therefore, we have these two annual indemnity limit caps, either rand amount or the number of hours, whichever is the lesser. So which one you hit first, limited to 100 hours for any one claim. So any one claim means that you can claim it more than once a year. Doesn't matter, you can claim 10 times a year, as long as any claim is not more than 100 hours, any one claim, and combined, they're not more than what your annual aggregate is, R1 million or 300 hours, whichever is the lesser. So I hope that clears it up a bit. So that's for companies. Companies include sole traders. So if you're a sole trader, you see your risks same as companies, and you take up companies cover. Individuals, excluding sole traders. Individuals, we look at your annual taxable income in the last tax year. So if you earn between 2 and 5 million rand in a year, your premium is 355 rand a month. The indemnity limits, again, is on the right-hand side. It works similarly, just with individuals, it's limited to 50 hours per any one claim. So those are companies and individuals. Quickly on trusts. As I said, there's two types of trusts. The one is a trading trust. The trading trust is a trust that actively carries on trading or is used in the conduct of business. So people use their trust sometimes as a business, and then we rate it in a similar fashion as what we do companies. As you can see, it's rate banded also. The rates are slightly different. The indemnity limits are also slightly different, but there's the same mechanism. We look at your annual turnover in the last financial year. So you check where your trust annual turnover is, you pick your premium, and your indemnity limits, you're already aware of it right from the get-go. And then passive holding trusts. Passive holding trust is a trust which holds assets for passive investment income only. It says so onto your application form, so you can read what it says. So passive holding trust, of course, is a trust that holds assets, might be properties, might be equities, or something in that fashion. It's not a business. There might be some transactions through it. So you might have auditing fees, dividends, beneficiary payments, audit fees, etc., etc. But it's not a business. It's there to hold assets for future generations to come, which is the intention of trust, to start off with. And there you can see it's a flat rate of 292 rand a month, irrespective of the amount of assets that sit in that trust. And there's your indemnity limits also. What I have not said yet is if you're a company or an individual and you exceed these bands that we've provided, so for a company, your turnover is more than 100 million rand, for example, you can still buy the cover We can cover companies up to R1 billion annual turnover. You just need to use the same application form. You fill in your turnover. You send the same application form to us or to your broker. We will then do specific underwriting because your risk is larger. So we'll give you customized pricing. We might ask some additional questions about the risk and what you tend to do. So we can do the larger organizations or people also. Kevin, I'm about at the end of my presentation. Just finally, there's the contact details. For SATIB, if you want to take out the cover, you just email contact@satib.co.za, or you phone your normal advisor. But you're also welcome to give me a shout. There's my contact details. There's also a whole bunch of information on our website at www.taxrisk.co.za. Got some more examples, some frequently asked questions. You can download the application form from that. There's a whole bunch of other stuff you can do from that website. So that's it, Kevin. And
thanks.
Thank you.
Thanks, Willem, and thanks for everybody for joining. I think it's very informative. It's definitely something, as I said before, that we have through all our companies in South Africa and all our senior individuals. But so thanks, Willem, for your time and for educating us. And if you need any further information, anybody on this webinar, you can go to the SATIB website, get hold of your account executive, or get hold of Willem. Enjoy the rugby this weekend, and we'll see you for the next webinar, which I think is coming up in a few weeks. Ciao.